This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iran said on Wednesday the United States had agreed to remove all sanctions on Iran's oil and shipping, although Germany cautioned that major issues remained at talks between Tehran and world powers to revive a 2015 nuclear deal. The Iranian remarks, by outgoing President Hassan Rouhani's chief of staff Mahmoud Bazi, echoed previous assertions by officials in Rouhani's pragmatist camp that Washington is prepared to make major concessions at the talks, which have been underway since April in Vienna. The talks adjourned on Sunday for consultations in capitals, 2 days after Iran held a presidential election won by hardliner Ibrahim Raisi, the Iranian judiciary chief who is on a U.S. blacklist. Raisi is due to replace Rouhani in August.
The Pricing Department of China's National Development and Reform Commission, NDRC, and the country's market regulator have sent teams to various Chinese provinces and cities to investigate bulk commodity prices and supplies. The NDRC, China's state planner, has been heavily involved in efforts to tame high prices for commodities from coal to copper that have squeezed manufacturers' margins in the world's second biggest economy. China's factory gate prices in May rose at their fastest annual pace in more than 12 years. The working groups will learn more about bulk commodity spot market transactions and carefully listen to feedback from midstream and downstream companies on supply levels and price fluctuations, the NDRC said in a statement on Wednesday.
Moving on to the top news in the energy sector.
Buoyed by powerful demand expectations as the world moves away from reliance on fossil fuels, prices of many industrial metals rocketed, but future price rises are likely to be limited to a select few energy transition ingredients. The narrative of a synchronized upswing, characterized by some as a supercycle, is at odds with expectations shortages of materials will occur at different times. Energy transition metals will take off big time, but not all at the same time, Wood Mackenzie analyst Julian Kettle said.
Oil prices rose on Wednesday, with Brent climbing above $76 a barrel to its highest since late 2018, after data showed U.S. crude inventories declined and reinforced views of a tightening market as travel picks up in Europe and North America. U.S. crude inventories fell by 7.6 million barrels last week to June 18 to 459.1 million barrels, the U.S. Energy Information Administration said, compared with analysts' expectations in a Reuters poll for a 3.9 million barrel drop. Stockpiles at Cushing, Oklahoma, the delivery point for U.S. crude futures, fell by 1.8 million barrels to the lowest since March 2020. Gasoline demand also edged higher last week, helping to support prices. Next, we have the top news in metal markets. Copper prices extended gains on Wednesday after the head of the U.S. Central Bank vowed to keep interest rates low to boost economic recovery and data showed strong factory activity. 3-month copper on the London Metal Exchange, LME, had gained 2% to $9,488 a ton by 1400 GMT. It had dropped 8.6% last week, its biggest weekly fall since March 2020, on fears that U.S. monetary policy would soon tighten. After the dramatic falls of last week, this could be a good entry level if you're an investor or a consumer, said independent consultant Robin Barr.
Chinese coking coal futures closed 5% higher on Wednesday, rising for a second straight session on supply concerns as safety inspection by authorities halted production at some mines. The most traded coking coal futures contract on the Dalian Commodity Exchange, for September delivery, ended at 2,037 yuan, $314.24, per ton. Due to government probes after a raft of mine accidents recently, some mills are facing supply shortages for the material, said Zhu Guiqiu, an analyst with Jinrui Futures, adding coking coal imports had not improved as well.
We will now look at the top news in the agricultural sector.
São Martinho S.A., a large Brazilian maker of sugar and ethanol, said it plans to produce more of the cane-based biofuel and less sugar from its 2021-22 crop. São Martinho said late on Monday it intends to use 58% of the cane to make ethanol, up from 53% for the last crop. We believe ethanol prices will stay at a higher level along the season compared to the previous crop, a result of higher oil prices and the recovery of fuel sales in Brazil, the company said. The guidance from one of the 5 largest sugarcane processors in Brazil is somewhat surprising, as analysts have been expecting mills to keep a strong focus on sugar production in the new crop, basically repeating the production mix seen last season.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.